Are you thinking about buying a car? Should you finance it? Should you lease it? Or should you pay cash? Let's go for a walk and talk about this. And be sure to stay to the end, because when I ran the numbers, I was shocked by what I found. And at the end, I'll share with you a simple way to save over $10,000 on your next car purchase. Okay, so, if you're buying a car, you really have those three choices, right? Cash, finance, or lease it. And the challenge is, if you're buying a new car, the average new car in the United States is just under $50,000. The number is $49,388, and that's up over 6% over the last year. Now, this is the purchase price of the car plus the taxes plus all the transaction costs. So that's a lot of money. And if you're thinking about paying cash, you have to take into account the opportunity cost of that cash, right? If it's let's call it $50,000, and versus the other two options, maybe you're putting down $45,000 more. Maybe for the other two options, finance and leasing, you only have to put down $5,000. So we have to take into consideration the opportunity cost of that money. If you finance it, really the big factor there is what interest rate can you get. A year ago, interest rates, or actually about 18 months ago, at the start of 2022, interest rates were just under 4%, the average interest rate on new car purchase. And now that's gone to over 6%. But of course, we all see the ads on television. They're always running specials. I've seen interest rates as low as 1.99%, so just under 2%. So a big factor there is what's the interest rate that you have to pay. And then finally, a lease. I think most of my viewers are familiar with what leases are, but essentially it's a long-term rental, right? And you have limits on the amount of miles. You are responsible for any damage to the vehicle, just like if you were renting a car, only instead of renting a car for 48 hours, in this case, you're renting a car for 3 years, let's say. And there's built-in interest rates effectively with that. And the built-in interest rates vary quite a bit, and it can be shocking how high these interest rates are. According to a Forbes article, typically leases have a built-in interest rate of about 8%. Dave Ramsey would tell you that number is closer to 15%. So that's a big variance, and it can make a difference. So, let's dive deeper into each one of these options. So I mentioned earlier about paying cash for a car and the opportunity cost. Let's just say the average new car, full in, costs just under $50,000. And let's say that you end up, just for easy math for me, let's say that you end up putting in an extra $40,000 than what you would need to if you were leasing it. So if you lease a car, you got to put down a down payment. If you finance a car, typically you have to put down a down payment. And let's say you end up, if you're paying cash, being out of pocket by $40,000 more. Well, in today's world, where interest rates, as of right now, let's say you're going to pay off that car in 3 years. You're going to lease that car for 3 years. That $40,000 right now, a 3-year United States Treasury, which essentially has no creditor risk. The U.S. government is the creditor. They're going to print money if they need to pay you back. So there's no creditor risk. And 3 years is a pretty short timeline. So even if interest rates go up, you're going to get that money back. So there's not much what I call duration risk. Right now, you can buy a 3-year Treasury that's yielding just under 4%, 3.8%. So let's call that 4%. Let's say that difference in out of pocket is $40,000. It's probably a little bit more, so it all washes out. So your cost per year, the opportunity cost in basically a risk-free asset, 3-year U.S. Treasuries, your opportunity cost, you could be getting $1,600 a year for that $40,000. So we have to take that into account. So that's an extra $1,600 a year over 3 years. Let's call it $4,800. And just to round up, that's $5,000. So that's what you're out of pocket because you had to put more money into it, and that money could have been working for you. So that's the pay cash option. Now, remember, stay to the end because you can see where these numbers are starting to add up, and there is a way to save over $10,000. So I want you to stay to the end. And by the way, if you're finding this video helpful, do me a favor, take a second and hit the like button. Thank you. Okay, the second option, financing. And here, as I said earlier, interest rate is key. You know, if you can get an interest rate of about 2%, academically, it probably makes sense to finance as opposed to paying cash. You know, the challenge with financing is we tend to live way above our means during the journey because of that debt. And then, you know, that debt follows you. Let's say that's 6 years car payment. You know, that's 6 years that you've got to live with a car payment, even if you get a good interest rate. So again, the academic answer, you know, you're probably able to earn a higher rate than that 2%. So the academic answer is to finance. But the who you are and whether you want to have debt answer is often a different thing. For me personally, I don't like debt. Most of my clients don't like debt. So that's just part of it. You also have to be careful because that payment on a $50,000 car can be quite high. In 2022, 1/6 of all people financing their cars had a car payment, just a car payment, not including the maintenance, the insurance, everything else that's involved in owning a car. The car payment alone for financing was over $1,000 a month. That's a lot of money. So that's the finance option. And then finally, leasing. Now, leasing is, you know, the car industry puts a lot of advertising into leasing, and there's a reason they do that, right? It's very profitable for them to do it. I mentioned earlier, Forbes would say that the built-in interest rate for financing a car, for leasing a car, Forbes would say it's 8%. And if you're a fan of Dave Ramsey would say it's as high as 15 or 16%. Again, you don't own the car. You're essentially renting it. There's only so many miles that you can put on the car per year, and then you have to pay extra for every mile that you put on over that. And I think one of the things that I look at and say, is renting a car, well, it's kind of renting, is leasing a car a good deal? And one thing is only 25% of people that lease a car end up leasing their next car. 75% choose a different option. They choose not to lease their next car. So that kind of tells me these are people that have lived with it for 3, 4, 5 years. They've had the experience of leasing, and they're choosing, 3/4 of them are choosing not to lease their next car. Okay, anything else here? And the other thing is, even if the interest rate is low, because you don't own the car, almost certainly the cost of owning a car outright is going to be less over a 6-year period than doing 2, 3-year leases. I hope that makes sense. So if you're going to own a car, you know, we're going to own cars until we can't drive anymore. It's the American way. But over the next 6 years, if you had a choice between owning one car outright or leasing 2 different cars, each for 3 years, the cost of ownership almost certainly is going to be less with having one car for 6 years. Now, of course, you don't have that brand new car after year 3, but just something to think about there. And I should also say that the trend for leasing is going down quite a bit. Before the pandemic in 2019, 30%, almost a third actually, 30% of all new cars were leased. And as of the end of 2022, that was down to 17%. That's a big drop. And I think people are beginning to realize it's a big expense in order to drive a newer car when you choose to lease it. Okay, and now on to my conclusions. But before I get there, do me a favor, hit the like button. It really does help other people find my channel. As the kids say, thumbs for likes and subs for love. And leave me a comment. I love reading the comments, and it's kind of the currency for me of why I do YouTube. Okay, so the conclusions. You know, it's basically, when you do the math, it's pretty close, particularly when you take into account the opportunity cost of capital. If you can get financing at one of those 1.99% rates or lower, which is getting increasingly hard to do these days, then you might actually be better off financing than using cash. I'm not a fan of debt. So the other thing is, when you lease a car, you don't have to worry about what the fair market value of that car is at the end of the lease, right? You just take the car to the dealership, they check it to make sure there's no damage, they check the mileage, and then you're done. But if you buy a car for cash or you use financing, you've got to sell that car at the end. So what the fair market value at the end of the lease is, that becomes more and more important because you're on the hook for that. You've got to sell that car, either trade it into the dealer or sell it to a private party yourself. So if you think the fair market value is going to be a lot lower than what it has been in the past, then you might actually be better off leasing. If you think the fair market value is going to be higher, which has been the case over the last 3, 4, 5 years, right? I mean, the price of used cars is dramatically up to above where it was before the pandemic. So if you think fair market value is going to be higher, you're probably much better off financing it or buying it for cash. Again, I'm not a fan of debt if you can avoid it. So what's this magical way that I mentioned about how to save $10,000, right? I did the math for you on opportunity costs. I showed you where that can be $1,600 a year, which over 3 years gets really close to $5,000. So there's two ways to get to 10,000. One is in the spirit of this video and one's outside of it, but it's something I believe I believe to my core, and it's one of the reasons that I started my YouTube channel. The first one is, if you look over a 6-year period, if you're going to do 2 car leases, well, $5,000 and $5,000 is $10,000. So that's one way that you come up with that $10,000. But even more importantly, for the love of your financial plan, if you're thinking about buying a new car, I really want you to think twice about that. Because new cars are just so expensive. And I think one of the least sacrificial ways for you to save additional money is to buy a used car. Again, for the sake of your financial retirement. I'm a financial advisor. Think about it, the difference between buying a new car and buying a car with 25 or 30,000 miles that's been well taken care of, has not been in any accidents. Those are very, very similar experiences. So it might be one of the least sacrificial ways for you to save an extra $500 a month, right? The average family spends it's our second largest expense in the United States. It's $900 per month for transportation is what the average household spends on transportation. And I really think if you buy a used car, you could probably get that down to about $500 a month, which would, over 12 months, would save you $400 per month. So over 12 months, let's just call that $5,000. That's a big amount of money. The average American makes just over $1,000 a week. So that's $50,000 a year. If you can save an extra $5,000 for the average American, that's an ability to increase their savings rate by 10 percentage points. That's huge, particularly if you're not funding your 401k at work, if you have access to one of those and the company offers you matching. You're doubling your money if the company offers you matching. So if you're not putting money in your 401k and you're not getting the advantage of the match, boy, buying a used car can give you the money to put money into the 401k, and you're getting a one free dollar for every dollar you put into your 401k. So that's my shocking revelation is, please think twice about how much joy you're going to get out of a new car. If you get a lot of joy out of driving a new car, great. I'm not trying to pass judgment or saying you shouldn't do that, but just be thoughtful, be deliberate, understand what the trade-offs are. And if you're like me and many of my clients, maybe every 10 years you buy a new car, but between there, you buy used cars. So it can be a really powerful way to increase your savings rate. So I hope you found this video helpful. Again, if you did, as the kids say, thumbs for likes, subs for love. Leave me a comment. I love reading the comments. And until next time, I'm Asul, encouraging you to take full advantage of the youth of your senior years. remember, we're only young once. Let's use our time wisely.